Interesting how you split up the Mag 7 into, you have, I would imagine, Tesla and then the Mag 6. Do you regret your decision to sell down that position in Tesla? Because that, I would imagine, that is also part of why some of your investors are asking and talking about concentration risk. Where is our Tesla in your strategy? Where is our Nvidia in your strategy?
First, on the Mag 6 versus Mag 7, we didn't create the Mag 6. The market threw out Tesla from the Mag 7 when it started underperforming this year. So that wasn't our concoction. That was the market generally saying, okay, we guess Tesla's not in this group anymore. And we were kind of happy about that. We didn't want it to be.
Side point, the reason I bring that up also, and I want you to be able to talk us through that, the macro environment that you seem to be describing that we are headed into of lower rates, doesn't that benefit all 7 and not just Tesla, for example?
If you look at the valuations of these companies relative to where they were pre-COVID, unlike our portfolios, most of the stocks in our portfolios, which are back to 2018 levels, some even 2017 levels, think about that. And these stocks are at all-time highs. Will they benefit as much as ours? Highly unlikely. Highly unlikely. We think it's more like that 1930s example. Now, to answer your question directly about would we sold and it has tripled since. We were in for the first 100-fold increase. So we rode it up 100-fold. Would we have liked another triple? Sure. I mean, and if we had known it was going to triple, absolutely. But here is the most important question. For Nvidia to deserve where it is right now from a valuation point of view, other companies out there must be having phenomenal results, provocative results that are turbocharging them and moving forward. We think we have a lot of companies in our portfolio that will enjoy the AI swoosh, but it is going to take time. And I think that is what a lot of people are missing. And this is what we were thinking as we were selling Nvidia and moving more into Tesla.
One notable figure in the world of investment, Cathie Wood, known for her forward-thinking approach and bold predictions, was unwavering in her confidence in Nvidia, despite a recent post-earnings sell-off, but now she is not sure anymore. This isn't a case of mere cynicism. Rather, it's a strategic belief that the profound potential of a company that is known for adapting and thriving amidst industry challenges might not exist anymore. Is she right in her assessment? Only one way to find out. Welcome back, everyone, to Investocracy.
Obviously, one of the reasons for the weakness in the market at the index level, specifically, is Nvidia, which is down again. It's take a look at Nvidia today.
Yeah.
It can't get any footing from earnings. It's been down about 5% today. It's off more than 11% year to date. It is the big issue, along with momentum. You're out of it completely now.
I am out of it.
When did you sell the rest of it?
I sold the rest of it when they reported earnings. So it's I didn't get it on the upswing in the earnings because it went into the green. I sold it when it started to go into the red. Look, there are a few issues with Nvidia in my view. One of them being that with Apple, for example, you're starting to see them make their own chip, and others all have plans to. It's got competition. Also, it's been reported that China is buying the Nvidia chip through other countries. So I think that's an issue for them. And then finally, when you take a look at what tariffs could do, and Taiwan Semi has been called out for tariffs, that stock's really gotten hit. It's not reflected here, but they'll pick up the excess capacity.
Well, they're
if
about to
NVIDIA comes
announce,
down.
we think, according to the Wall Street Journal, a $100 billion investment in the U.S., something
Right.
you may hear more about as the afternoon progresses.
Right. Most of which, frankly, has been announced already. But the point on NVIDIA is that a lot of people didn't even know why they owned it. They owned it for the momentum. And they owned it because they didn't want to sell it because of taxes. And I think part of the hit to technology overall is that those that came into the year saying, okay, I'm going to wait to sell until the next year, 25, and hopefully pay lower taxes or just delay my taxes for a period. They said, you know what, I can't hold on anymore. So it's a combination of factors that hit that in tech. But it's really notable that the only 2 of the 12 sectors that are down year to date in the S&P are information technology, which is tech, and consumer discretionary.
Which is obviously heavy weighting towards Tesla and Amazon.
Exactly. And I actually am still negative on the market, not bearish, but still negative, and looking to raise cash. That's one of the other reasons I sold NVIDIA.
All right. Despite losing some hope in Nvidia, Cathie Wood still sees Nvidia as more than just another player in the tech sector. She considers it a high-growth stock with the potential to achieve a remarkable 20% compound growth rate. This potential shines even more brightly in light of the looming competition from major players like AMD and Amazon, who ventured into the AI chip market. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
It's kind of interesting because we have export restrictions on quite a few countries, but apparently not Singapore.
Yeah, and I was just there on Friday, right? So I could tell you the sense is that these export controls, it's not going to be really constrained to ultimately Singapore. And I think the fear here, and I think you're seeing on the Nvidia sell-off, is that this is going to be a huge ripple effect. It's going to be harder and harder to get those chips. That's something, even though there's the China piece, it could have a much broader impact across the region. I think bark's worse than the bite. I mean, as someone, in Asia for 2 weeks, I think it's when I get the fears, but I don't think this is something that's really going to be as much of a restrictive factor, despite everything we saw today.
Do you think it's deep-seek concerns that are spurring this next wave, potentially, of regulation? And I guess perhaps just as importantly, has the train already left the station when you look at homegrown chip development in a place like China?
Look, I think DeepSeek, that was a shot across the bow because I think everyone recognized, okay, they didn't do this in the basement with no chips. And it comes down to if they use next-gen NVIDIA chips, what does that mean? And I think, look, the broader fear, especially that you see in the Trump administration, is, okay, we got to restrict it more and more. So I think what you're starting to see from an investor perspective is, okay, what does this mean for NVIDIA? Second derivatives. Is this going to crimp the supply chain? Now, we disagree. I think when it comes to tariffs, we've seen many times, this is one, it's going to have an impact, but I do not believe it's going to have such a pronounced impact. I think it's being factored in here in terms of supply chain. Still, 15-to-1 demand to supply, when it comes to Blackwell.
Well, okay, bark is worse than bite. But still, a bark can be pretty bad if it hurts sentiment, right? If it sort of puts a wet blanket on the party, has an impact on valuation. At what point does it start to do that? And do you have to, if you're an AI investor or even NVIDIA investor, have to get less bullish?
Yeah, look, I mean, no doubt you're going through a lot of turbulence here. From a sentiment perspective, you're seeing the stock. Then it becomes self-fulfilling prophecy. But what I'll tell you is it comes down to just demand. Do we see any changes in spending? That demand's going to continue to be there. And I think it's when there's only one chip in the world that ultimately could fuel this. I get we're going to go through this, but in my opinion, these are opportunities, not the time to run for the hills. I think when you look at it in terms of tech winners, if you look over the years, it's period like this in these white knuckle periods that you own the winners, you own the NVIDIAs.
Recently, Nvidia released its earnings report, which unveiled a margin outlook of 70.6% to 71% for the upcoming first quarter. While some analysts may view this projection with a degree of skepticism, potentially interpreting it as a sign of distress, Wood's perspective remains decidedly optimistic, yet understandably cautious. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So I wonder if you see Nvidia falling much further. Is this an attractive price to be buying it, do you think?
Well, we own it in some of our portfolios. We are not buying the dip yet. We do want to learn more about DeepSeek and more about how the market or the demand for inference chips might outpace those for training chips. We think the whole area is going to be vibrant. We just think there might be a little bit more of an adjustment to this new reality.
Where you say that what DeepSeek shows is kind of that you can do more with less capex.
Yes.
Who do you think that's going to motivate in the US most, as Donald Trump is kind of saying? Who's going to be best at doing more with less?
Well, anyone using AI, we are focused on the productivity gains for knowledge workers, which are going to be massive. That's the biggest impact of AI. But if we're looking at sectors and spaces generally, where this acceleration in innovation is going to be meaningful, we think autonomous mobility, so robo-taxis, we think that's going to scale from essentially nothing now to an $8 to $10 trillion global opportunity, including China. But the sleeper here is healthcare. And we're seeing the convergence of sequencing technologies, all kinds of sequencing technologies, artificial intelligence, and then gene editing technologies like CRISPR-Cas9. That combination, we believe, is going to cure disease. It's already curing disease, sickle cell disease and beta thalassemia. That's CRISPR Therapeutics. But we think they're aiming now for type 1 and type 2 diabetes. That would be a category killer. So think about that, curing disease, AI helping us decode the secrets of life, death, health.
As the competition in the AI chip market intensifies, Nvidia stands firm, solidifying its role as a cornerstone of the industry. With a storied history of innovation, leadership, and a relentless drive for excellence, Nvidia seems equipped to continue driving growth and delivering substantial value to its shareholders. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.